Well, David, we have the rand still holding steady just above that 740 mark. A little bit of weakness coming through to 743. Before a currency that's noted for being one of the most volatile in the world, we have seen some stability over the past week or so.
Well, today in particular and last week in general, very, very quiet session, Stephen. Today there's absolutely nothing going on in the currency markets. All eyes turning to the Fed and to see what wording they use once they've made their statement. We don't expect any interest rate movement, but we will be looking for some wording change. The market getting really nervous, and because the Fed has tried to indicate over the past few weeks that they, that the accommodation policy is here to stay. Everybody, of course, very scared of a double dip recession, because really, from a fiscus point of view, there's not a lot of money to throw at a new problem should it arise. So all eyes on the Fed statement, and as a result, the markets are absolutely dead.
So do you think if we take out that clause for an extended period of time, we could see a sharp reaction on the markets, David?
Well, I mean, it depends what they replace it with. If they replace it for some time, then the market will speculate as to when, have they brought the interest rate hikes closer? And it really just depends on what the kind of language is that comes out. And the problem is if they leave the statement exactly as it was in the past, then you've got to deal with the change of statement at the next policy meeting. So it's really all about data, really all about what that allows the authorities to do. But from my own perspective, I think it's steady as she goes. I think monetary authorities across the world are absolutely terrified of a double dip recession and what that will do to the global economy and global sentiment. And I think they'd be very reluctant to make major changes at this point.
Well, if we look at some of the data we've had out of the US recently and some of the data we're expecting this week, we had those retail sales on Friday, a little bit better than expected, but really not shooting the lights out. We had consumer sentiment numbers disappointing the markets. We're getting some housing stats this week, also the leading indicator, and those aren't likely to be very positive either. Do you think that we need interest rates going up anytime soon? Do you think the data really points towards keeping interest rates flat?
I think this is the entire point, Stephen. Economic growth going forward is going to be better, but it's going to be relatively slow. And central bank authorities across the world have noted this, from Europe to the US to Japan, and even into emerging markets. We may get some growth, but it's going to be very slow and very sluggish. In the background, we've still got the challenges of possible deflation, particularly when we look at asset prices. There's no inflation threat whatsoever. And I think the Fed will use that knowledge to say that they're going to keep rates as low as they possibly can for as long as they possibly can, to ensure that the global economy revives itself, even possibly at the threat of slightly higher inflation going forward, because that's a smaller threat than potential deflation.
Of course, at the same time, we also have the threat of possible defaults. We have European finance ministers meeting today, likely to be discussing Greece at that meeting. And of course, we know that Greece has 20 billion euros of debt that comes due in a couple of months' time. And that's just part of the 55 billion euros of maturing debt. So Greece still not out of the woods. Are we looking to the Eurozone to get some confirmation or reaffirmation that they will help Greece if need be?
Stephen, in my opinion, fiscal challenges across the world, not only for Greece and not only for Southern Europe, but across the world are going to be the dominant factor as far as global economics is concerned. We had Moody's for the first time that I can remember raising a warning to the US, saying that they are in an unsustainable situation, and in fact, should it continue, and they are talking very long term, they're talking years into the future, that the US might risk their AAA status. So my view is that these fiscal challenges are going to be the real issue going forward, and that's why I'm saying that central banks will be very reluctant to push buttons to raise interest rates too soon, because should they precipitate a move into a double dip recession, authorities, monetary or fiscal authorities across the world simply don't have the resources to throw any more money at the problem.
David, what are you making about the growing tension between the US and China over the yuan? Of course, we had President Barack Obama last week urging China to adopt a more market-orientated exchange rate. Last week, it looked like China was going to do something about the yuan, but we had the Premier over the weekend saying he doesn't think that the yuan is undervalued. Do you think this is going to come to a head at some point?
Stephen, it's difficult to see how. China needs the US imports, and the US needs China to buy its debt. And I guess this is one of the great dilemmas, the global dilemmas going forward. You know, how do we deal with an exporting nation like China? Huge exports, accumulating huge reserves, and the power that subjects them to as far as the global economy is concerned. It's hard for me to see that, you know, the politicians can get involved and find any solution. There's no doubt that the yuan is slightly undervalued, or perhaps substantially undervalued. And it is assisting them to export, but they're not going to change that anytime soon. They need to keep the growth engine going in China, not only for their own populace, but certainly to fuel the world at the moment. I think it's simply rhetoric. I think over time it'll sort itself out. I can't see it becoming a big political issue, I must admit.
Well, how about the rand and where you'd expect the rand to go? We've been around that 740 level for a while now. Of course, we do have retail sales coming out later this week. The market's still looking for a small contraction, a bit smaller than the 3.7% we saw in December. What are you expecting, and where would the rand move on that?
Yeah, I think it all depends on the Fed statement. Should the Fed leave things on hold, I do expect the rand to gain some traction on the back of that. We've seen a little bit of profit taking, particularly against the crosses towards the end of last week. And I do think, Stephen, that, you know, the rand has been relatively range bound now for the last week. I think a breakout will be swift, and should it come, will be quite swift. I think that the breakout might in fact come to the downside, to the strong side, and if we get below 735, then I think we could target 720. For now, I think simply you know, investors around the world are happy to invest in emerging market currencies that offer yield, and I don't think the Fed is going to say anything that's going to change that sentiment.